It was about a month ago we collapsed below this 18-month channel bottom that is now 380.39 and climbing weekly. In the process of closing below this structure, we're still anticipating as a long-term target 228.05. So the rally at this stage that has played out over the last few weeks is considered counter trend in nature. We've anticipated as much because there is this intermediate support on the way down we'd mentioned as our near-term objective. What is now 291.81 to 294.08. 294.08 is a descending channel bottom. 291.81 is a full wave count. It is really the same structure as the channel. Low 290 support. We've tested it. We've come off of it. Can we rally back into the low 380s? It is certainly possible, but on the way up, as we've been mentioning, a 2 to 3 week target was actually tested last week at 346.31. And this remains an area that can contain weekly buying pressures, and we can fall away from here back into the 290s over the next 2 to 3 weeks. And so if there's any play right now, if you're a 2 to 3 week swing trader, it is being short from the 346.31 area, anticipating the low to mid 290s again over the next 2 to 3 weeks. And I do think if we close today below 333.37, that really underscores that bias, that scenario. And I think you can say rather than the 290s in reach or attainable over the next few weeks, we can say expected. With the settlement today below 333.37, I would anticipate over the next 2 to 3 days 317.96. That is a downside 5/8 Fibonacci over the last few weeks. And then once again, ultimately closing below 333.37, that 2 to 3 week possibility in the low 290s becomes a probability. So if you've yet to go short at 346.31 and you're looking to go short, closing today below 333.37 is your signal to do so. 317.96 likely then within 3 to 5 days or less, and the low to mid 290s within 2 to 3 weeks or less. Now, if we do close below 291.81, and I do consider it an eventuality, then this longer term objective at 228.05 is likely within a couple of months. We could round up from here through the rest of the decade. Upside here, if we do close today above 346.31, we're expecting more upward continuation. 364.02 likely within the week. That is that April low. And 380.39 within a couple of weeks. So over the next roughly 2 months, this descending channel top at 418.52 will converge with this rising channel bottom at 380.31. As we continue into September trade, it'll become narrower and narrower, and I will begin to refer to it as our range of long-term resistance, where one could set a short position or exit a long position, whatever the case may be, but establish a short position that anticipates bearish rotation over the following roughly 3 to 5 months into the upper 220s. I don't see a reason to buy Tesla through the rest of the year and into the first quarter of next unless we close above 418.52 or you're bottom picking 228.05. Those are the two scenarios. Until then, we've got a counter trend rally on our hands that may have actually topped out last week at 346.31 and we can fall away. That becomes confirmed, of course, with the settlement today below 333.37. Please click like, share, subscribe, check out wickedstocks.com.